What's going on, everybody? Jeff here. Welcome back to the channel. All right, guys, I posted a couple tweets. I do not post on Twitter often, talking about the algorithm, and somebody had left a comment kind of questioning a little bit about it. So I do want to break that down for you before we get into the meat of this video, which is going to be about where 80 to 85% of my profitability comes from. This video is sparked off a conversation I had with a member inside the group just over this weekend, and I hope it resonates with you because I'm willing to bet this is probably true for a good percentage of traders. So first off, I had posted this saying that the algorithm had caught the long side. This is showing, I think, QQQ, and it also had caught the short side. What do I mean by that? Well, first of all, like I've been trying to, publicize, I've created this algorithm, and by I've created, I mean, I'm really just kind of like the trading aspect of it. And I have a coder writing all of this inside of TradingView, but we created an algorithm, okay, that really breaks down what I am looking for when it comes to setups, right? What criteria, and this is from a very, systemized format, what criteria needs to be met in order for me to enter a trade. Now, where did I come up with this criteria? Obviously, these are setups that I trade on a regular basis. Okay. All of these, triggers are in real time at candle closes. So you can see this long came through at the candle close at 10 o'clock, which I trade off 3-minute candles. So this would be 10:03 right here at 405.50. Got that move all the way to the upside. Obviously, we had that short again. It kind of wanted to retest those highs. Now my stops are set at previous, swing highs, which obviously it just barely didn't make. And we had a long test over here, which was a scalp high. I probably would have, not let this trade go red, but I definitely wouldn't say this is a profitable trade, probably a break-even trade. Why did this trigger go through? Well, you see some PM support looking for a bounce, as well as that 405 level. QQQ came in even cleaner today. A long, same thing off that setup, that 957, which would have been 10 o'clock. The short right at the top pretty much tried another long bounce. Clearly, it didn't get that. Last one I will show you guys, NVIDIA was another one, a little scalp short, which is another setup that I would continue to take, even though we had a nice move to the upside, and it's because we broke that pre-market support, came back up here, retested, and it held. It showed that there was rejection. This is another very profitable setup. Okay, the biggest thing that I see about this algorithm, okay, is there's a couple things. When it's computer generated, it obviously doesn't have the feels. And what I mean by the feels is it doesn't get a feel for, okay, you literally seeing a live price action saying you can see that rejection. You can see that rejection. This is based off of, specific criteria. Okay. That's a downside when it comes to an algorithm. The upside to an algorithm is it completely deletes emotions. You can see right here that this is based off purely off of my trading criteria that I've explained over quite some time to a coder, is to short when you see a rejection off that pre-market support. However, to flip once it is gained. Right. And it goes to show that, listen, you don't want to hold on to losing positions once it gets invalidated. Okay. Which I probably, if I did take this short, all right, obviously this is the algorithm. This is not, all of these are not my trades that I take. Okay. This is just based off of my system. Okay. Obviously I would not have just scalped this little move right at the beginning. So I probably would have gotten stopped out. But the most important thing is that you don't hold on to it. You don't pray for something more. Okay. Obviously it turns out, NVIDIA did break lower. You would have had Friday contracts, but that's not the basis behind it. The basis behind it is to immediately do not have emotions when a trade moves against you. And doesn't mean you have to flip to the other side, but when another setup presents itself, flip to the other side. The algo flipped long right here at 10:12, rode that move all the way to the upside. Once it saw a break of market structure, as you can see here, a rejection under this level of 241. Okay, it was a little bit of a lower high. We shorted that and it came down, it shorted it again, all the way again from this 240 down to where we currently are 20 minutes before market close at 253. So guys, I'm going to continue to update this, then eventually I will release it to everybody. Okay, and I'll continue to show you updates. But what I want to talk about in this video is not only the 408 almost retest of this level showing that market structure. We do have Jerome Powell speaking tomorrow. Okay, he did testify today in front of the Senate committee. committee, and tomorrow he does have a little bit of a prepared speech. So if there is any update on monetary policy, okay, due to the recent, release of CPI, PPI, and PCE from the last time we spoke, we might get a little bit of indication, okay? Now, as far as events moving forward, Friday is the non-farm payrolls and unemployment, and then the 14th is going to be our next CPI. So let's get into what I want to talk about in this video. Somebody had reached out to me and wanted to break down some of his trades. He feels like, over time he makes 10 steps forward and then it's like 10 steps back. And a lot of times, he's kind of treading water. And this also sparked me to look back into my own trades. Now, I journal all of my trades on pen and paper. I also use TradeZella that uploads trades, but I really like the pen and paper. I've done it for, years, and it just builds a little bit more connectivity. I remember things a little bit better. The reason why everybody, okay, not just myself, journals their trades is because it's going to help you identify what works, what doesn't, what are your strengths, and what are your weaknesses, right? Now, there is room for argument saying you want to be able to try to build on your weaknesses and so forth. Okay, try to, obviously strengthen your weaknesses, right? But there's also, room for argument saying that you also want to focus on your strengths and get rid of the weaknesses, right? It's like business 101. You trim the fat, you trim what doesn't work, and you focus on what's most profitability. And this sparked me to also go into TradeZella and kind of cross-reference some things and upload a little bit farther back on my my Thinkorswim and my Webull accounts. And I really noticed that like 80 to 85% of my profitability comes from 10% of my trades. Right. And so how many of you have been sitting there and you might take, 5, 6, 7, even 10 trades in a day, and you're either red, okay, or you're break even, or you made, next to nothing. And you're thinking, like, you spent 8 hours of grinding, of time, of effort, of stress, of risk, right? And you're really just kind of spinning your wheels, right? And then there comes a time where there is an amazing setup like we had the other day, last Thursday, which was a failed breakdown, okay? Or even Friday, which was a massive slow grind to the upside. And it's kind of like, or you can even say this morning, upside and downside, but let's just, focus on Friday, and you miss that entire move. And that's because your brain gets geared towards that scalping mentality, okay? Your brain gets geared towards where you have a little bit of fear because, your last few trades that were really on days that maybe you shouldn't be trading, okay? Or it was just chop range bound, and therefore you didn't size appropriately, right? There's an old saying of you need to know when to put your foot on the pedal, right? And when an opportunity presents itself, when a setup presents itself, to really go heavy on those setups. And so what I've tried to do over the past few months, especially as, volatility's still there, the VIX is much lower, okay? So obviously options premiums, which is what I trade, are moving a little bit differently. I've really tried to take my foot off the gas when opportunities don't present themselves, right? Get away from those, 6, 7, 8, 9, 10, 11, 12 trades in a day where I literally might grind for, if you including pre-market, for 8 hours in a day, focusing and trading and going through stress. And then I realized like I either the monetary value was just like, well, hey, I did all this and I'm either break even, or I'm only up a little bit, or I might even be red. And it's like, I want to try to get away from those days. And what I've noticed is that those are the days that really chop up traders. So if I can make a recommendation for you guys, okay, it is to journal your trades. Try to take, go and look back on what have been some of your best trades. And I'm not just talking about trades where you're like, listen, SPY has to reverse, let me buy a put. And then, you put down your phone, walk away, and then all of a sudden news comes out and it tanks. That's kind of luck. You know what I mean? I'm talking about actionable setups that you saw, that you recognize, that you capitalize on, that you executed well on, and really just wait for those. Okay. And also I will say this, there is, some, a trader that I do look up to. And what I noticed is that when I would look at, when he would share, what trades he took in a month, sometimes, out of like, let's say 20 trading days, like there was like 10, 12 days where he took 0 trades. And I'm just like, this guy literally has, is probably so much more stress-free than, than I might be on some of those days where like he is only capitalizing on when the market presents itself. He knows his strengths. He knows his weaknesses. He stays away, and you don't need to trade every single day in order to, be able to make a monetary, amount that you feel comfortable with, or whatever your target goal is. So guys, I encourage you to go back, Okay, and journal all of your trades. One thing I am doing inside of this algorithm is not only explaining my setups to the coder to be able to code this, but also going to be explaining them in detail, what specifically I look for, and kind of coming up with a 1 through 10, right? Because a pre-market bounce, a break and retest, obviously it has different categories, right? Where does the trend? Are we in a chop zone? Okay, what did the pre-market look like? Is there events coming up? And try to rate that 1 to 10. And when you really get to that 2 or 3 on the setup, you might want to go a little bit lighter. But when you get to that 8, 9, 10, where everything is matching up, those are the times you really want to go heavy. And that's how you really grow your portfolio. From what I've seen, it's not over trading. It's not trying to take as many amount of trades or try to capitalize on every single move in the market. It's just knowing when the market offers you something, okay, that is very actionable, right? And executing on that profitable setup. So guys, I hope this video helps. Leave a comment down below if you want me to go over any other setups. I'll be more than happy to. That's it for this one. I'll see you in the next one.